Well, let's get talking now. Despite economic challenges faced by the country in 2022, the stock market arm of the Nigerian Exchange Group remained resilient in the past year. In terms of value, the overall market capitalization increased to 7.91 trillion naira in 2022, representing an increase of 25.2% from the 22.297 trillion naira it closed in 2021. The stock market contended with factors such as foreign investors' exit, aggressive hike in monetary policy rate that change investors' perception in the market, investments in the third quarter of 2022, among others. Although foreign investments in equities waned in 2022 amid lingering FX liquidity constraints and heightened global uncertainties, however, improved domestic investors' appetites for stocks triggered a high level of activities that engendered credibility and relative stability in the market. Well, let's review major activities that characterize stock trading at the Nigerian Exchange in the year 2022. And of course, we'll make projections for 2023. I'm being joined via Zoom by the divisional head, Capital Markets at the Nigerian Exchange Limited, Mr. Jude Chiemeka. Good afternoon, Mr. Chiemeka. It's really good to have you join us on the show.
Good afternoon. Thank you for having us.
Yes, well, let's briefly do a review of market activities, of course, in the year 2022. I'm sure some notable things happened during that year. Take us through some of it.
Great. I mean, last year was one of those years where you had very difficult macroeconomic environment. But despite that, the exchange in itself did remarkably well. The all-share index was up 20%, like you rightly pointed out earlier, and we did see increase across all the various asset classes that are listed on the exchange. The equities market was up in terms of value of trades, 27%, as well as the fixed income market, that was up 10%. We had a dip in the ETF, but the market cap was up by 10%. I mean, the dip was really orchestrated by the FX challenges that we saw in the market last year, especially around our product, our new gold ETF, that faced a bit of challenge around the liquidity. But the major driver, one could say, would have been around the improved corporate earnings. We did see corporates recover very swiftly from all the COVID-related issues. And we also had low interest rates at the beginning of the year where we saw treasury bills trading at very low rates. So that gave investors the opportunity to switch assets. We also saw remarkable interest from the domestic investor base. Traditionally, the market trades 50-50 in terms of retail in terms of domestic and international. But last year, international was 17% and the domestic was 83%. So there was renewed interest from the domestic investor base. And all of that was really what was responsible for the growth in the value of trades, as well as performance of the index. It's also important to point out that we had some very significant listings last year. We did see Bua Foods list earlier in the year. That was 720 billion listing that we did, as well as Geregu Power that did their listing as well. That was a 250 billion naira. And so apart from the equities listing, we did see a lot of fixed income listings, including the federal government, the FGM bonds, notably the free zone listing that was done, 25 billion that was done, as well as the Dangote. So all of these activities is really what was responsible for the great performance that we saw in the market last year.
Beautiful stuff. Now, but would you say that the goals and objectives of 2022 were achieved in your thoughts?
Yeah, from the exchange's perspective, yes, we did set out post the neutralization in terms of consolidation and product development. And so we were able to launch a derivatives product sometime in February. We were able to launch an NGX index futures, which is really easier for the domestic participants and investors, as well as market intermediaries to get used to the derivatives product. derivatives product in itself is good for our market. For the first time, we're having a complete market that has an instrument to be able to de-risk all the volatility that the market is used to or was used to in the past. And we were able to also complete the ALP project, which is African Exchanges Linkage Project that integrates all the African markets. And that in itself saw the CEO of the NGX being elected into the ESCO of the ALP, of the Asia Association itself. And we were also able to create the enabling environment for SME listings. We did see some listings on our group board following the revamp of the group board itself. And all of this, to a large extent, I would say yes, this change was able to meet some of the promises were made around product development, around technology, and we were able to get approval for a technology board that will allow this change and investing public as well as the issuers to democratize opportunity that we find in the technology space. And so we do have that ability now following the approval of the SEP rules for companies, tech companies, big tech companies, and smaller fintech companies to be able to list on an exchange. And you know, the technology company itself is completely different in terms of valuation, in terms of the metrics that investors will use to be able to assess. So we have the right pipeline for these companies to be able to list and as well for the investors to enjoy the growth this sector itself presents to the investing public.
But what's the outlook now for 2023, considering a macroeconomic crisis currently enveloping some sectors? Of course, you know all of this, manufacturing space, issues around monetary policy, economic headwinds, upcoming elections, investors sitting on the fence, not being able to repatriate funds. We can go on and on. What is your outlook considering all of these contending issues?
I think you're quite right. Going into the year, the political element of it is very top of the agenda. The exchange itself is not political, so whoever wins the election will have to deal with some issues really around security, around the FX convergence, around economic growth, the debt sustainability. We believe with the right framework, with the right policies, these issues can actually be addressed. And the capital market in itself presents an opportunity for the government to utilize the capital market to raise capital to be able to address all the various challenges the government is probably facing around revenue generation. The capital market will be able to provide the platform for the government to utilize in raising infrastructure capital for development that can turn the economy around very quickly if properly utilized. But we believe that from the exchange perspective, we'll continue around product development because we're also interested in growing the domestic investor base. The market itself, like they always say, liquidity attracts liquidity. And so in order to attract international liquidity, we have to have a robust liquidity in our market. So on the retail side, we'll continue to use technology to drive financial education, financial literacy. We are working on a USSD that will allow investors quick access to the market. We're also working around a digital highway that will allow a seamless onboarding of investors and access to products in our market. And we're working in creating more products that will be appealing to the younger generation, especially the Gen Zs. It's always about return, access to market, and at the same time, affordability. So we're able to introduce digital assets that this group of investors can invest in and take advantage of the platform that exchange provides, especially where the fear of recession is looming. There's so many Ponzi schemes offering all kinds of returns, but we do know that the stock market offers the best return in terms of long-term deployment of capital and also a safe path to be able to conserve and preserve your wealth over a longer period of time. So all of these things we'll continue to look to do to create that enabling environment. But more importantly, on the SME space, we're also working to ensure that we are able to incubate some of these companies. We do have partnerships that we were able to get last year. We'll continue to work around those partnerships, but we'll continue to operationalize those partnerships in the SME space. The partnership we have with Bank of Industry will allow us, we're running an elite program that will allow SMEs to be properly incubated. It's not just about the desire for capital, but also around management issues, around corporate governance, structuring their business in a way and providing that mentorship in order for these companies to be able to access public funds. And we'll continue to work on that. On our traditional listings, obviously, the exchange offers the best platform in providing capital to all these corporates. And we'll continue to work around that. Our trading system is world class, it's NASDAQ, and we'll continue to trade robustly. We traded last year, and all through last year, we had no single day of downturn because of the heavy investments we've made in technology. And we'll continue to use technology to drive product innovation, capital raise for companies, but more importantly, on the advocacy side, the exchange will continue to stay focused in encouraging the government to make better use of the capital market to be able to meet the shortfall in revenues that is currently plaguing the government.
Well, in the light of the above, what priority projects or what other priority projects would the NGX emphasize to carry out this year, and of course, processes and plans to deepen stock market going forward?
Yeah, I mean, our plan to deepen the stock market is really around product development. One, so we'll continue to work on that. Two will be to provide the enabling environment for investors to be able to utilize these products that are being developed. So we'll continue to work around partnerships, especially international partnerships. We'll continue to work around products on sustainability, which is now huge. We're looking into the carbon space. We'll be able to provide a rating service so that companies that are looking to comply in that space will be able to get the right ratings. We think that that's really the way to go, as it will help to attract a different class of investors that we haven't had for a while now. As you know, we do have an MOU with Luxembourg Stock Exchange around green bonds and sustainability. So we'll continue to operationalize that in creating products around sustainability. And Islamic finance is another area. I mean, we've seen how the government have taken advantage of that in raising the much needed capital for the roads around the Sukuk. So we'll continue to work around that space to create more products around Islamic finance, more capacity building, even for the domestic corporates. We also have partnership with IFC around sustainability. So we'll continue to just operationalize all these partnerships, ensuring that our corporates are also able to take advantage of this partnership that we have. For instance, we have partnership with Dubai Financial Center Services. So what we plan to do with that is to allow our corporates that are listed on our exchange to have access to more pool of liquidity from investors outside of our market. We believe that that will really allow corporates to be able to raise capital outside of Nigeria. And we believe that the African Exchanges Linkage Project is one key area that can also help unlock liquidity even within the African space. So we'll continue to pursue that. We're working on AfriZim PAPs to provide the settlement leg that will help grow liquidity in this space. As you know, the current linkage project is being funded by African Development Bank, and that has created the technological platform to integrate all these markets. There's also data sharing amongst all these markets, so investors are able to trade. We have trading license holders in Nigeria that are also linked to this project, and we've seen the first trade go through in the area of this African linkage project. So we'll continue to establish our dominance in this space in creating the hub, the African hub to be able to allow investors raise capital, but more importantly, allowing investors access to safe way of preserving and growing their wealth in the long term.
I must thank you so much for your time, Mr. Jude Chiemeka. He is the divisional head, Capital Markets, Nigerian Exchange Limited. Thank you for sharing your thoughts with us on Business Nigeria. Do have a great weekend.
Thank you so much. It's a pleasure to be here.